Hi, welcome to the Market Alert for Thursday, the 14th of July 2016. What I want to do this morning is to go through each individual trade on the chart, because if you have a look at this in its entirety, you can see there are a lot of losing or black dots on the chart there, and that's not strictly the case. There isn't 4 losing trades here, so I'm going to go through the thought process of why that isn't the case. So coming back to the recorded version here, we'll just set this off. And first off, we have a potential sell signal from the open 5 minutes after. And then we see the market, as I fast forward through here, go and fill the trade. Now, what you've got to take into consideration here is that we have the crude oil figures, and I've said in many market alerts, this used to be a medium impact news item, but for the last 6 months this has become a high impact, very important news item for the stock market because of the relationship, or used to be a relationship, between crude oil and the stock market. But when crude oil dropped off dramatically last year by 70+%, it became a main focal point for the market. So if the stock level showed a reduction, this would be bullish for the market, etc., etc. So as I've said before, you don't want to be in for the crude oil figures when they're released, just in case the figures are being fiddled and they're far greater or far less than the actual predicted figures. So here you've got a situation where we're getting close, we've got a buy signal, you want to ignore the buy signal. We're already short from this one, so this one is ignored, and this one is ignored as well. And we've got to get out of the market. Now if you decide to wait until it comes up towards the entry price, then so be it. You can see the market there just hitting that, and that's a 23-point loss on this initial trade. Like I say, these two are ignored because we have the crude oil inventory figures to be released into the market. So the figures are released, they come out, I can just see the figures there. You'll see the market's reaction as the figures are released, and you'll see the figures here. We had a forecast of -2.3, they came out at -2.5, so not too dissimilar from the forecasted figure or the previous figure as well. So the market puts in its reaction, doesn't know what to do, and then trades sideways for the next half an hour or so, and then we have a potential sell signal that comes into the market. This is filled, the market goes down, has a maximum of around 16 points. You see there 16 points before the market then reverses and prices come all the way back up. You can see prices heading back towards the 18,350 level, that's the blue line. You see the market coming through there. We know when these resistance levels are taken out, the market's likely to continue higher, especially with making new all-time highs as well going on in the background. And there we see the market just reset the chart. Prices become sideways. In the evening session we get a potential buy signal. The market then puts in another sell, and you can see we're stuck in this range, and by this time I'm thinking this is not going to go any further. And at this point during this trade, sent out a note to say going to cease trading. See the market goes up, picks up 20 points there to offset some of the two losing trades, a 23 and a 28 loss. And then the market again just goes into this sideways range. But notice also the 18,375 is the all-time high. The market actually went and put in another all-time high during yesterday, and then you'll see I just turned off before we got to the end of the session after sending out the email. So let's go back to the daily charts. This is current. You can see the market there once again moving higher. We just switch to the 5-minute chart and drag across. You'll see the market again in the sort of all-time high area. We've put in another new all-time high on the overnight, 18,381. So we've got a new all-time high now as well. We just zoom in on the daily chart and then on this way as well. So you can see there the market putting in these all-time highs each day. Again, the volume is absolutely nothing. This is just a market that's being kept on the highs at the moment. So going up on fresh air is what I'm actually saying there. News-wise today, we've got a French holiday. Not that that will make any difference. We've also got the MPC meeting here in the UK. And it looks like, according to the figures here, we're going to get, the forecast is anyway, for a reduction in interest rates following last month's Brexit referendum. And also they're going to reveal the figures for who voted out of the 9 members which way, which is not really that important. And then over to the US, there is absolutely no news out in the afternoon session for the US. Now, the market will move if the UK reduce their rates, because that's going to be great for the stock market. That's how it's worked since 2008 when we had the credit crunch, or as it's now known, the Great Recession. I don't know why, because we're still in one when you look at the figures. So the Dow will move higher because of that decision taken by a central banker to reduce those rates. But if he doesn't, then the Dow is likely to be sideways because it is waiting for news. As I've said before in the market alert at the moment, this market is news driven. Everything, every breath that a central banker takes at the moment is interpreted for the market. They don't even have to speak these days. They just have to turn up somewhere or whatever, and that's enough to see them out and about to move prices, let alone say anything else. And like I say, even breathing is enough, because we know they're still alive. So the news, market driven at the moment. The news today, if the UK decrease interest rates by 0.25%, then you will see the Dow move this afternoon. Otherwise it's likely to trade sideways. So I'm just letting you know that that's what it's been for the last few days. Even though the market's gone on to make new all-time highs, you can see the narrowness of the range of the price bars as the market's done this. There is no buying volume. There's nothing supporting this market. It is just a market that's being driven by central bank decisions and rhetoric at this time. And implied volatility, new record low, 1028. I have seen it below 10%. I can't remember what year it was, but we have been below 10%, and then we had a major correction. But as I say, the lower these figures go, the better. You can see this in the chart now. We have a new year low for the second day of 1028 for the implied volatility. And just on a lighter note, I actually recorded a video yesterday about the Italian banks. It's 13 minutes long. It's the Euro banking crisis update. Italian banks want money. Deutsche Bank are in a bad way, and Bernanke's secret visit to Japan. So instead of putting it in the market alert, I recorded a separate video. So I will put the link in today's email for if you want to actually have a look at this. And it's quite interesting when you have to record a video and you have to do the research, where you can actually find out what's really going on behind the scenes. And there'll be more of these to follow as well. And there is also one to follow immediately after this, because I talk about helicopter money, which I touched upon in the market alert a couple of days ago. But it appears that yesterday, one of the Fed representatives from Cleveland actually mentioned that the US were considering helicopter money as well. So there'll be a follow-up video to this one shortly on other countries that are looking to adopt the similar policy that Japan may do, and I say may do, at the end of this month, where money will be given direct to citizens to go and spend in the economy to create the hyperinflation that they need to try and drive down the value of this debt that they've actually got, and also to increase interest rates, because then you get real inflation and not asset-based inflation of house prices, stock prices and bond bubbles. Anyway, that's it for today. It's dragging on a bit too long here, but that's it in essence. And like I say, if I see anything today, I will let you know. Other than that, have a great day, and let's hope things pick up a bit on the volatility front. But this is why we're getting the narrow moves, because we're making historic lows in implied volatility, and the two go hand in hand as well. That's it. Thanks for watching. See you in the next one.